Unveiling the Ultimate Inheritance Tax Strategy, a comprehensive guide. In today's world, planning for the future, especially when it comes to taxes, is crucial. With an increasing number of estates facing inheritance tax, it's time to explore a little-known trick that could save your loved ones a significant amount. The inheritance tax trap, a growing concern. According to recent data, an alarming 31,500 estates were subject to inheritance tax in the 2022 to 2023 tax year, a 13% surge from the previous year. This trend is expected to worsen due to pension rule changes and the tax treatment of farms and family businesses. By 2030, experts predict a staggering 10% of estates will be paying this unpopular tax. Understanding the tax rate. Inheritance tax is levied at a rate of 40% on estates valued above £325,000. However, there's a silver lining. If you pass your primary residence to a direct descendant, the threshold increases to £500,000, provided your estate is worth less than £2 million. Additionally, any assets left to a spouse or civil partner are inheritance tax-free. And married couples or civil partners can inherit each other's allowances, allowing them to pass on up to £1 million tax-free. The power of planning. Mitigating the tax bill. With careful financial planning, you can significantly reduce the tax burden on your loved ones. Generous gifting exemptions are available, including an often overlooked rule that allows you to pass on an unlimited amount of money completely tax-free. Let's delve into this game-changing strategy. The normal expenditure out-of-income exemption, unlocking tax-free gifts. This exemption, despite its catchy title, is a powerful tool. It allows you to make regular gifts from your normal monthly income without reducing your standard of living, and have these gifts escape the risk of inheritance tax. Tim Stovold from the accountancy firm Moore Kingston Smith explains, this exemption is incredibly generous. There's no limit to the gifts, and the money is immediately considered outside the estate. Why this rule is underutilized despite its benefits? Fewer than 2,000 estates claimed this exemption in the 4 years leading up to 2022-23, according to NFU Mutual. The average tax savings per estate were £52,650. Chris Etherington from RSM attributes this underutilization to a lack of awareness and the rule's complexity. He suggests that the administrative burden and the need for ongoing record-keeping may deter many. Making the most of this exemption. To ensure HM Revenue Customs accepts your gift as normal expenditure, consistency is key. Give the money regularly, at least once a year, and maintain a pattern over 3 to 4 years. Consider writing a letter of intent or setting up a direct debit to establish this pattern. Ensure the gifts are of roughly the same value, as larger gifts may not qualify. The gift must come from employment, pension, rental, or dividend income, or savings interest, not from capital withdrawals. Proving your income surplus. You must demonstrate that the gifted income is surplus to your needs. Keep records of your everyday expenses, including mortgages, insurance, bills, council tax, travel costs, entertainment, holidays, and nursing home fees. Remember, you must still be able to cover these expenses after making a gift, and dipping into your capital could disqualify the gift. Avoiding common pitfalls, Tim Morris from Russell & Co. advises, consistency is vital. HMRC typically looks back up to 4 years to establish a pattern. If this pattern is not evident, the gifts may not be exempt. Familiarize yourself with the IHT 403 form, which executors must complete when applying for gift exemptions. This form will give you an insight into the records you need to keep and how HMRC assesses income and outgoings. Conclusion: empowering your financial legacy. This little-known exemption offers a powerful way to reduce the tax burden on your loved ones. By understanding and utilizing this strategy, you can ensure your legacy is passed on with minimal financial strain. Remember, with careful planning, you can make a significant difference in the lives of those you leave behind. And here's the controversial part. Are these tax rules fair, or do they favor the wealthy? What's your take on inheritance tax? Share your thoughts in the comments below.